The year is 2011. The sound of sirens echoes through the polished halls of a massive Seoul high-rise. Inside, the mood is one of controlled panic. Documents are being shredded, executives are whispering urgently into encrypted phones, and the atmosphere is thick with the smell of fear and stale coffee. This isn't a hostile takeover. This is the slow, agonizing death throes of a titan. The Woongjin Group, once the pride of South Korea's mid-tier conglomerates, the poster child for aggressive diversification, is crumbling. Its empire, built brick by ambitious brick across industries ranging from water purification to private education, is about to implode under the weight of its own expansion. At the center of this maelstrom stands Yoon Seok-keum, a man who once commanded respect, now facing the catastrophic failure of his life's work. The news breaks like a sonic boom. Woongjin Holdings files for court receivership, a staggering 4.7 trillion Korean won, or roughly $4.1 billion USD at the time, of debt hanging over its head like the sword of Damocles. This wasn't a sudden shock. It was a slow-motion disaster years in the making, a story of strategic myopia meeting crushing financial reality. The debt levels were astronomical, but the real tragedy lies in how a company that seemed untouchable became a cautionary tale whispered in boardrooms across Asia. How does a seemingly unstoppable corporate machine grind to a halt, leaving thousands jobless and investors staring at empty ledgers? The fall of Woongjin was not just a business story. It was a national spectacle, a painful reminder that even the most determined visionary can miscalculate the forces of finance. The first domino was about to fall, and it carried the weight of billions of dollars in liabilities. But the true cost of this collapse wasn't just measured in won or dollars. It was measured in shattered ambition and the systemic ripple effect that threatened to destabilize an already fragile Korean economy. This wasn't just a bankruptcy, it was an amputation of a major limb of Korean industry. The moment the receivership papers were signed, the intricate web of subsidiaries, supply chains, and employee futures began to fray, unraveling at an alarming speed. The question haunting every analyst, every banker, and every former employee was simple. How could Yoon Seok-keum, the legendary builder, have allowed his creation to slip so violently beyond his control? We are about to trace the precise path from unimaginable success to utter ruin, a journey paved with arrogance, desperate acquisitions, and the fatal belief that Woongjin could conquer anything, even the immutable laws of capital. The initial shockwave was just beginning to hit the financial markets, and the true scale of the disaster remained hidden beneath layers of complex corporate maneuvering. But the foundation had cracked, and the collapse was inevitable. To understand the magnitude of the Woongjin collapse, you must first understand the man who built it, Yoon Seok-keum. Born in 1947, Yoon was not born into the Chaebol elite. He was a self-made man, an archetype of the post-war Korean entrepreneurial spirit. His journey began humbly, selling water purification supplies, a seemingly mundane sector that would eventually become the bedrock of his empire. In 1980, he officially founded Woongjin Group, laying the foundation for what would become a household name across South Korea, famous for its innovative water purifiers. Yoon was known for his relentless drive, but more importantly, for his almost religious focus on water and air purification, cleanliness and health being core tenets of his early vision. By the late 1990s, Woongjin had cemented its status as a leading mid-tier conglomerate, respected for its technological prowess, particularly in environmental solutions. Yoon was frequently lauded in the Korean press as a visionary capable of spotting industrial white space where others saw only saturation. His philosophy wasn't just about profit, it was allegedly about societal contribution, a narrative that burnished his reputation immensely. By the early 2000s, Woongjin Holdings controlled a vast portfolio, including the successful Group business unit, but Yoon's ambition was far from satiated. He looked beyond water and air, eyeing sectors that promised faster, more explosive growth: energy, heavy machinery, and crucially, private education. This pivot into education, through the acquisition and expansion of Woongjin Think Big, was perhaps the most symbolic part of his ascent. In a society obsessed with academic achievement, controlling the flow of private tutoring and educational materials positioned Woongjin not just as a corporation, but as a fundamental pillar of Korean societal aspiration. When Yoon Seok-keum addressed his employees, he spoke of building a global top-tier company, a company that would rival the Samsung and LGs of the world, albeit slightly later in the timeline. He often cited the necessity of bold action, famously stating that stagnation was the only true failure. This mindset fueled a series of high-stakes maneuvers, including significant international investments in natural resources, particularly coal and forestry projects in places like Indonesia and Canada, aiming to secure long-term stability against volatile commodity markets. The group's revenue peaked near $5 billion USD annually, and its workforce swelled to over 15,000 employees. Yoon Seok-keum, dressed impeccably, a portrait of corporate success, represented the dynamic, aggressive second generation of Korean business leaders. Yet, beneath the shining veneer of success, the seeds of overconfidence were already being sown, specifically in the valuation of assets and the sheer velocity of expansion. The sheer pace of acquisitions meant that the group's financial health was becoming increasingly opaque, masked by positive headlines and aggressive leveraging. The next major move would test the limits of that leverage. The late 1990s and the subsequent Asian financial crisis acted as a perverse crucible for Woongjin. While many established conglomerates buckled under the weight of reckless borrowing, Woongjin, under Yoon Seok-keum's careful navigation, emerged relatively unscathed, even managing key strategic acquisitions when competitors were distressed. This period cemented Yoon's reputation as a shrewd survivor. The most crucial element of their success remained the water purification division, Woongjin Group. By the mid-2000s, Group was generating predictable, massive cash flow, providing a stable financial anchor for the group's wilder ambitions. This consistent revenue stream reportedly allowed Yoon to borrow aggressively, convincing banks and investors that Woongjin's growth was sustainable and its diverse portfolio acted as a natural hedge against sector-specific downturns. The educational arm, Woongjin Think Big, capitalized perfectly on the Korean cultural imperative for academic excellence. By integrating technology into tutoring services, Think Big quickly became a formidable player, generating substantial profits that were then immediately funneled into financing riskier, capital-intensive ventures. This era was defined by a culture of, if it can be bought, it should be bought. Yoon Seok-keum directed a relentless campaign of vertical and horizontal integration. He targeted companies that could feed into his existing ecosystems or open entirely new revenue streams. For example, the move into renewable energy wasn't merely about capturing market share. It was about showcasing Woongjin as a future-focused entity, aligning perfectly with global environmental trends, even if the immediate profitability was questionable. The group's headquarters became a symbol of this success, a towering edifice in Gangnam District, projecting an image of impenetrable financial strength. Annual revenues soared past the 5 trillion Korean won mark, and the company's stock performed robustly, reflecting the market's confidence in Yoon's M&A strategy. Between 2005 and 2008, Woongjin made several high-profile acquisitions, including significant stakes in various real estate development projects across Asia, signaling a global outlook. Yoon was reportedly fond of saying that the only barrier to growth was imagination, a philosophy that permeated every level of management. This period was undeniably the zenith. Woongjin felt untouchable, a high-flying conglomerate successfully navigating the transition from a niche player to a diversified giant. The management team, intoxicated by sustained success, began to view market downturns not as threats, but as opportunities to purchase assets at a discount, often financed entirely by debt that the buoyant cash flow of Group was expected to service effortlessly. They had mastered the art of leveraging future earnings, but they had yet to understand the fragility of that promise. The real test came not from expansion, but from contraction, and the first sign of trouble was hidden within the very sector Yoon banked on most heavily: education. The expansion had become too rapid, too reliant on perpetual growth, and the margins in education were about to squeeze. The first significant crack in the meticulously constructed facade appeared around 2009, stemming directly from the ambitious push into the high-stakes educational technology sector. Woongjin Think Big, while profitable on paper, required constant, enormous capital injections to maintain its technological edge and competitive pricing against established rivals. The costs associated with integrating new digital platforms and securing top-tier instructors were skyrocketing, outpacing the returns. Simultaneously, the global economic climate following the 2008 financial crisis had fundamentally shifted. South Korean consumer spending, particularly on supplementary education, tightened considerably. Parents, facing their own economic uncertainty, began scrutinizing the high fees associated with Woongjin's services. This slowdown meant Think Big was no longer the cash cow Yoon needed it to be. It was becoming a cash drain. But the truly catastrophic misstep came in 2010 with the acquisition of the highly leveraged, debt-laden Korean engineering firm, Woongjin Energy. This move was pitched as essential for securing advanced material technology and diversifying into industrial machinery. The purchase price was steep, reportedly over 1 trillion Korean won, but the real danger lay in the debt Woongjin assumed alongside the assets. Yoon Seok-keum believed he could turn the struggling company around quickly, leveraging Woongjin's superior financing structure. However, Woongjin Energy required far more restructuring and capital infusion than projected, dragging down the entire group's consolidated balance sheet. By late 2010, Moody's and S&P analysts began issuing increasingly stern warnings regarding Woongjin's high leverage ratios, noting that the debt-to-equity ratio was alarmingly high, exceeding 300% in some internal reports that would later surface. Yoon Seok-keum reportedly dismissed these concerns as the caution of those unwilling to embrace risk, famously insisting that their natural resource investments would soon provide the necessary buffer. However, commodity prices were volatile, and the expected returns from their overseas coal operations were significantly delayed, creating a liquidity crisis that the stable Kuwait cash flow could no longer mask. Internal memos, later reviewed during bankruptcy proceedings, showed that by early 2011, the group was struggling to meet short-term obligations, relying heavily on rolling over short-term commercial paper. The narrative of unstoppable growth had given way to the grim reality of unsustainable debt servicing. The market, initially forgiving, started to price in the risk. The stock price began a steady, worrying decline, erasing billions in market capitalization, signaling that the street no longer believed the myth of Woongjin's invincibility. The company needed a lifeline, and Yoon Seok-keum was about to make a desperate play to secure it, a move that would ultimately seal their fate. The year 2011 became the definitive turning point, the year Woongjin transitioned from a struggling giant to an active collapse. Facing an impending liquidity crunch, the inability to roll over maturing debt worth hundreds of billions of won, Yoon Seok-keum initiated the most painful strategy imaginable for a founder: selling the crown jewel. In July 2011, Woongjin announced the sale of Woongjin Kuwait, the cash cow that had sustained the entire group's aggressive expansion. The sale, eventually finalized with MBK partners for approximately 1.2 trillion Korean won, about $1.05 billion USD, was desperate. Yoon reportedly intended to use the proceeds to pay down the crushing debt and stabilize the remaining, struggling subsidiaries like Woongjin Energy and Think Big. However, the market perceived this sale not as restructuring, but as surrender. The announcement triggered a massive sell-off in Woongjin Holdings stock. The $1.05 billion received was quickly consumed by immediate debt obligations, leaving the remaining group entities fatally exposed. The structural damage was already done, the core engine was gone, and the ancillary businesses could not generate enough cash flow to service the remaining liabilities, which still hovered near the 4 trillion Korean won mark. The situation deteriorated rapidly throughout 2012. Creditors, spooked by the loss of Kuwait's predictable revenue, tightened lending conditions across the board. Woongjin Energy, which Yoon had promised to revitalize, was now deemed unsalvageable. In April 2012, it was sold off at a fraction of its purchase price, crystallizing massive losses for the group. The cumulative effect of these forced liquidations was devastating. In September 2012, Woongjin Holdings officially applied for court receivership, citing an inability to repay creditors after failing to secure a vital bridge loan. This filing immediately froze assets and suspended trading, effectively killing the company as a going concern. The ripple effect was immediate. Suppliers demanded cash on delivery, employee salaries were delayed, and the credibility of the entire Woongjin brand evaporated overnight. Yoon Seok-keum, who had personally guaranteed billions in loans, was facing not just the loss of his company, but personal financial ruin. Following the receivership filing, intense scrutiny revealed questionable financial management practices leading up to the collapse. Auditors later pointed to aggressive, possibly premature, booking of future revenue projections from overseas projects that never materialized, effectively painting a rosier picture of solvency than reality permitted. Furthermore, reports surfaced, which Yoon vehemently denied, suggesting that corporate funds had allegedly been inappropriately channeled to support failing ventures before the official declaration. The sheer scale of the debt, the 4.7 trillion Korean won figure becoming the headline number, overshadowed any attempt at operational turnaround. The creditors, including major Korean banks and private financial institutions, were left holding the bag for billions. The collapse wasn't just one decision, it was a cascade failure, beginning with the over-leveraging fueled by Koei's success, accelerated by the disastrous purchase of Woongjin Energy, and finalized by the impossible task of servicing debt without its primary cash generator. The final, agonizing phase was the piecemeal auctioning off of the remaining assets, including the venerable Think Big education division, signaling the final disintegration of Yoon Seok-keum's empire. The aftermath of the Woongjin Group's collapse reverberated throughout the South Korean business landscape for years. The immediate consequence was the dissolution of a major Chaebols structure, leading to massive layoffs. Thousands of employees suddenly found themselves unemployed, their futures uncertain as the various subsidiaries were picked apart by a barrage of court-supervised auctions. The brand name, once synonymous with trusted home appliances and education, became toxic, forcing acquirers to undertake expensive rebranding exercises. For Yoon Seok-keum, the consequences were deeply personal and professional. He faced intense public scrutiny and legal battles related to his guarantees and alleged management missteps during the precarious final years. While he avoided major jail time, his reputation as the visionary builder was permanently tarnished, replaced by the label of the over-leveraged gambler who gambled away a multi-billion-dollar enterprise. The legal proceedings were protracted, involving complex negotiations with creditors to settle the remaining 3 trillion Korean won in liabilities that lingered after the asset sales. The most enduring legacy of the Woongjin collapse, however, lies in the painful lessons it imparted to the Korean financial sector. It served as a stark warning against growth at any cost strategies, particularly when predicated on high levels of debt financing and speculative acquisitions in non-core sectors. Regulators subsequently tightened oversight on mid-tier conglomerates, demanding greater transparency in cross-subsidiary lending and asset valuation, trying to prevent another massive chain reaction failure originating from a single, aggressive founder. Woongjin Koei, the brand that started it all, eventually found new life under MBK Partners and later, as a successful, standalone entity, somewhat ironically proving the underlying viability of Yoon's original, simple business model. A model he abandoned in pursuit of something grander. Yoon Seok-keum eventually attempted a quiet return to business, focusing on smaller, less leveraged ventures, never regaining the stature or influence he once wielded. The tale of Woongjin remains a critical chapter in modern Korean economic history, illustrating that the sheer scale of ambition, when divorced from prudent financial management, can lead to an equally massive and spectacular ruin. The question remains whether the lessons learned from this 4.7 trillion Korean won failure were truly integrated, or merely filed away until the next wave of easy credit inspires the next titan to overreach.